I'm super happy that you are all joining, and I can see that there are so many questions, so keep them coming. I'm Sarah. I'm with Copenhagen FinTech, and I've been part of arranging the FinTech Week. I'm very happy today and slightly surprised, but we have a fantastic turn up and a fantastic panel coming next, our first panel, and it's a super interesting one. And so what will Europe and the Nordic's future financial and tech ecosystems look like? We having some experience in the financial industry from before, and having been to different delegation trips, arranged them to San Francisco and so on, I think it's really important to also see the global aspect of this, because of course all the ecosystem in one way or the other affect each other. So by that, I would like to introduce this great panel. Welcome.
Thank you.
Amazing. We have four great panelists with us. And I would love for you to introduce yourselves. First of all, Ken from Lunar.
Sure. So I'm there's a hard echo here. I'm Ken from Lunar. Lunar is a Nordic challenger bank. So we reside in Copenhagen, in Aarhus, in Stockholm, and in Oslo. And come Q2, we'll launch in Helsinki also. So the company is around 150 people, and we serve around 200,000 clients in the Nordics right now. So that's the brief intro.
Perfect. Rune, would you like to go next?
Yes, sure. I'm the CEO and co-founder of Nordic API Gateway. We provide an open banking infrastructure that actually works. And this means giving access to real-life data from personal and business accounts throughout Europe, and also provide the capability of doing payments directly from your account. We serve banks such as Danske Bank, DNB, OP Bank, Santander, but also a lot of payment gateways and payment companies and accounting system providers with data and with the ability to do payments on behalf of their customers.
Amazing. Nikira, do you want to go next?
Sure thing, and good morning, everyone. I'm Nkuru Waje, and I'm a Global Innovation Manager at Swift. Swift connects around 11,000 banks globally. We're a cooperative that really helps facilitate the banking payments from across the world.
And James?
Good morning, everyone. My name is James Ankers. I'm the Chief Investment Officer at Barclays Ventures in London. Barclays Ventures was a business unit set up a couple of years ago to identify, incubate and scale new business lines and business models within Barclays. And we interface with the fintech world in two ways. Firstly, we look to identify fintechs and other technology companies that we can work with in developing and building our businesses. And where we do find those companies to work with, we like to invest in them to cement that partnership. And secondly, we run two startup ecosystems, one of which many of you will be familiar with, which is Rise, which is our fintech ecosystem, with locations in London, New York, and Mumbai.
Amazing. See, I told you this is a fantastic panel. So let's jump right into it. How is the Nordic and the global fintech ecosystem responding to the pandemic and the global economic downturn? Would you like to go first, Rune?
Yeah, of course. I think, first of all, when you think about fintech, you have to remember that the whole fintech movement was born digital first. So I think, like in terms of having a focus on actually following and building technology for users on digital platforms in the digital space has been like the cornerstone of any fintech companies, even like challenger banks, neobanks, is to kind of provide a different solution that where the digital interface becomes the primary relationship builder of the customer and the company. And I think like in that sense, you could say that fintech is probably positioned to prosper right now with the change we experience with the COVID and the pandemic, because everything is now like at an accelerated speed, forced to become digital in order to actually give us the possibilities of building relations or making decisions. So I think like from that perspective, what has happened in the world right now is probably not like the baddest thing from the fintech sector, because the fintech companies has always been very focused on building digital solutions to help people engage and actually live their lives better and easier, because we knew from start that everyone was engaged on digital platforms anyways. On the other hand, you could say we probably also seen a lot of restructuring of strategies and plans and so forth, mainly centered around like the you could say the speed of scaling. So many companies, if you look into the challenger space, has been like pulling back on like launching in Asia and stuff like that. The whole global kind of perspective has probably been challenged a bit by COVID as well.
Nikira, do you have a point here?
Yeah, sure thing. And I think just to kind of build on Runa's point as well, we're definitely seeing this knock-on effect of seeing strategies change at fintechs, but also potential growth. However, I think when we start to expand the lens and really look globally, what we've really seen is that there's actually a lot of fintechs that are massively been put under stress because of this pandemic and this economic downturn. Specifically, if we look at emerging markets, they don't necessarily have the infrastructure to facilitate completely every of their staff, for example, working from home. It incurs many different types of cost, and just the infrastructure isn't there. So there's been quite a lot of, I think, hardship there, where unfortunately some fintechs, have had to kind of, re-strategize and rethink, and unfortunately, let some resources go. So I do think in emerging markets, it's probably hit them far harder than in, for example, maybe Europe or North America, where you have more reliable infrastructure. I mean, simple things like, good internet connectivity may only come from if you're actually working at an office and facility, versus will you be able to equip every single one of your employees to actually work from home, and what does that mean in terms of everything that they need to be able to do. I think the other part as well is that I think where previously, and I'm sure James can speak to that a little bit more as well, where previously there has been maybe a little bit more funding kind of available to go a bit more widespread across the board. There's definitely been quite a withdrawal in that, again, in specific regions where maybe certain fintechs who would have expected to get certain funding rounds closed this year and probably over exceed have actually completely underfunded, and that again has hindered them from growing the way they might have. And I think so it's a balancing act, right? Depending on where you specifically look at. I think the pandemic, yes, to some point has enabled that growth factor to happen. It has enabled new propositions that are completely digitally focused to expand and people to leverage that. If we look at, for example, sub-Saharan Africa, if you're looking at usually where the payments would have been more cross-border, actually you're now seeing that there's more inter-African payments happening domestically, leveraging those fintechs, which is great because it means that the adoption, has expanded. But again, I think not to take it lightly how much that pandemic and the economic downturn has really affected and stagnated certain ecosystems.
Fantastic. That's super interesting. So I think we need to also maybe address the elephant in the room. James, would you like to have a view on this perspective and maybe also talk a little bit about Brexit?
I mean, let me start by reiterating some of the broader points that have already been made. Look, I mean, 2020 has been a hugely challenging year, and it's going to continue to be so. All startups have had to deal with a set of really significant challenges from changes, profound changes in consumer demand, funding, which I think we'll come back to, and new ways of working. I've been, though, personally really impressed by the resilience of the companies that we work with and we've spoken to, particularly on that last point in terms of how fintechs have adapted to this new model, working from home, having to, not working in the sort of collective ways that, we all know help to really power innovation and, working at long distances for long stretches of time. And I've been, particularly struck by, we've recently reopened our RISE ecosystem in London, and significant demand from people from fintechs who want to come back into the ecosystem and be based there and work together. But just a couple of other trends. I mean, as Runa said, I think the way that fintechs have adapted their business models has been a particular trend that's really struck me, and the acceleration of that digitalization, but also the pivoting to meet new consumer demands. The second big trend, I think, and just really from the bank context, is that relationship between the bank and the fintech and the bank. So I think in the current environment, fintechs will be and are looking to work with banks and other large organizations even more than they ever have done in the past. And likewise, I think banks are going to be looking to work with fintechs as well. Banks clearly are under supreme amounts of pressure from a cost perspective themselves. They're having to continually reevaluate their operating models and think about partnerships with third parties to help to deliver things which they can't, or are going to struggle to deliver on their own. So that's all sort of quite a positive message, I think. On the negative, I think the time that it will take for fintechs to put in place those POCs and those working relationships with banks, those lead times are likely to increase as banks work through their own budgeting and other issues internally. So I think there needs to be an element of patience there and letting that process work through. And the final thing, and then I'll have a word about Brexit, but the final thing is, I'm very optimistic by the further innovation that we'll see coming into the fintech ecosystem, partly because of there will be some talent bleed from banks, and I think also other technology companies as economic circumstances dictate that they need to control their costs, and I think that will help a flow of talent into the fintech world. Look, in terms of Brexit, I think that's a very difficult one to call. I think I honestly, I'm not sure it's going to impact the ecosystem, particularly in London and indeed across Europe. I think there are powerful forces that are driving the development of those ecosystems. Clearly, there will be some impact on banks and other large companies, but Brexit has been trailed for long enough now that I think it's the impact of it and the forces of it are working their way through the system anyway. So I don't actually particularly expect a big bang or a significant new event when Brexit actually takes place.
Great. I think it was super to get your view on Brexit. I know it's a really popular subject for anyone living in the UK. The next one I would like to talk a little bit about is with Lunar. So when you look towards some of the UK challenger and neobanks, what is the difference between them and where Lunar is going? Because I know so many of us are following your journey and it's super exciting. I also would like to know a little bit of what challenges and opportunities you see in the Nordic fintech ecosystem.
A great question. I think I'm just waiting for the echo to drop off. So I think besides the obvious that our app is much cooler and sleeker than our UK peers and that we are doing a much better job, then no, I think in all honesty, I think it comes down to the business model. So there's a horizontal business model where it's around grabbing as much territory as possible, jumping to all European countries, jumping to the US, jumping to Asia. And then there's more the vertical play going in depth in smaller regions. And that's the Lunar model. So we want to be an in-depth challenger here in the Nordics, we want to play to all the national subtleties that is in the Nordics. And that also taps into the business model, maybe, because I think some of our peers from not only the UK but also elsewhere in Europe are operating on top of a slimmer interchange-based model. And I think that has its challenges also, especially in a post-pandemic world, just building your business on purely interchange. So you know, our model is a bit different. It's a vertical model in the Nordics. And then I think we have a more healthy breakdown of revenue streams. So we have multiple revenue sources also to scale the business more as a hybrid between an actual bank with our own financial products on our own balance sheet, and also all the interesting fintech features that we are building on that. So that, I think that's more the difference to the two models. Then to your question around the Nordics, I think, you know, the Nordics is a peculiar market because it's probably, if not then one of the most profitable banking landscapes in the world. So we have probably one of the highest lifetime values per customer. It's 4 to 5x times our peers in the UK and in the US. But it's also really defensive. So it's defensive to get into the infrastructure. It's a monopolized infrastructure run by banks. It's a monopolized clearing system run by banks. So it's tough to get into the infrastructure. And if you're looking from an outside perspective into the Nordics, it's just a 27 million total addressable market. So why would you bother going through all those efforts to go into national infrastructure hassle in both Denmark, Sweden, Norway, and Finland at the same time? So really profitable, really defensive, and then to some extent also a schizophrenic landscape, because if you're looking at customer satisfaction surveys, you will see that the majority of the Nordic population is fed up with their banks. But then if the same population is being asked if they want to change, it's a definitely no. So they have a hate-love relationship with their incumbent bank. So a bit schizophrenic market, I think. And if you're operating as a fintech in the Nordic, I think what's crucial here for, like, if you look at with the ways of opportunities in the Nordics, Nordic fintechs can also be too local. So you really need to have a solid business model if you want to do a scalable business just in Denmark or just in Sweden. So I think it's a matter of really conquering the full Nordics to build a business of a certain scale also. So plenty of opportunity, plenty of challenges also, especially around infrastructure. I think that's the core challenge up here.
That's great. And I just, when I have you here, then I know you're going to have a whole session in one of the other tracks. So anyone want to hear more about Lunar can also sign up there. So the next thing I want to talk a little bit about is funding. And I'm thinking, Rune, as an entrepreneur, how do you think the Nordics and the broader investor community is doing, and what more needs to be done?
Yeah, it's a good question, especially asking me, as I took in mostly strategic capital and really not any VC funding. But there was a reason for that too. But what I see right now, and I also think that's like going through all the speeches of the other panel debaters here, is that there's a theme around like rootedness, like coming back to some kind of roots, being like more locally oriented, being more like perhaps complex and more focused on actually solving the challenges in a market, more than just like hurrying away with a simplistic model, trying to land grab everywhere and becoming this global new Uber or whatever. And I think like when I look at like the investment community, there's definitely been a change there. That if you took from the 12 until COVID, more or less, it has been like a hype cycle where like it's about like launching the next big fintech unicorn and like pressuring them to just move ahead with very simplistic ways of actually building their businesses, and perhaps also simplistic ways of viewing countries. Where what I see today is some kind of like going back to like investing into local initiative, local regional initiatives as well. And perhaps also a bit like conservative, like investing back into your own portfolios, which is probably a safe bet right now, but it's also like hurting the industry from like an accelerated pace point of view, where I think right now what we need is to invest into solutions that actually can do things in Africa or do things in Latin America and so forth, but not necessarily the ones that can become the next big unicorn in all markets with a very shallow model. So it's a very personal opinion. I know that it can be challenged. And the way we build our own company is actually trying to do something really, really good in a market before we move to the next. That's what I call open banking that actually works, because it's actually a very tedious task to implement all those banking interfaces just for a company like mine. So instead of like hurrying away saying that we are fully European, we actually took some time to become Nordic, and then we're spreading to the rest of Europe with that model. And I think there's something to learn there. And it's similar to what I see Ken's case as well.
That's really interesting. I would like to ask James, as a CVC arm of the bank, and in this current climate, how is the bank responding, and what does the next 12 to 18 months look like?
So look, as a bank, we are definitely still looking to invest. Obviously, the starting point is to support our existing portfolio companies in terms of their ongoing funding needs. But we're absolutely still looking to invest in new opportunities. And both in Barclays Ventures and across Barclays, really the companies we invest in is very much strategy led. So as I sort of mentioned in my first answer, the need for Barclays to continue to find companies that they can work with externally to help solve solutions for their customers is only going to continue to increase. And so strategically, we need to continue to work with third parties, fintechs in particular, and so the desire to invest in those companies that we work with will continue as well. That said, as I mentioned earlier, obviously it's a tough environment, and so the hurdle for investing will be that little bit higher than it probably has been in the past, and that is likely to last for the next 12 months, and certainly until we have more certainty as to the outcome of the pandemic. I think more broadly, we think that there is plenty of funding available in the market. Again, investors are looking for certainty, or a bit more certainty before they invest. It's incumbent on founders and entrepreneurs to manage their runway closely. To take their investors on that journey, to speak to them earlier than they would normally do in terms of launching their funding rounds. But I think with careful management of that process, access to funding is still absolutely possible. Just one final comment in terms of what we're doing at Barclays in terms of helping our ecosystems. Outside of actually making funding available to companies, we're working as hard as we can with companies in our ecosystem to position them to access funding. That's partly through educational programs, and also partly through looking at the accelerators we can run, particularly through to some of the more underrepresented parts of the entrepreneurial ecosystem, and help young companies, as I say, to position themselves for those early conversations with investors.
Thank you, James. If we move on to more of like a global outlook, and I know, Nikiro, you have a very global perspective. When you look at the different fintech ecosystems, what do you see as emerging trends?
Yeah, I think it's a great question. I think ironically, payments will still, and for quite a long time, be a core focus when we start to look at emerging trends within kind of the global ecosystem. Why? Because of course, if you're looking at again, these different types of geographic regions, they would have all had a very different evolution in terms of kind of all things to do with payments. So that's really where you're now seeing kind of the next wave of challenger banks being born. And really growing in terms of success and in terms of having that consumer acquisition. We're still seeing quite a lot of fragmentation over certain ecosystems when it comes to those payments landscapes. For instance, LATAM as well as Sub-Saharan Africa. And there we're really seeing quite a lot of focus and investment in terms of, how will those payment infrastructures be built out by fintechs in order to create that interoperable layer. The other areas as well that we see in terms of kind of emerging within that are still the evolution of really the alternative lending fintechs. I think to Aruna's point earlier as well, it's like when you start to look at that double click on certain regions and start to think about, well, how can we better serve that, and how can we actually create propositions that matter for, again, those users that we may have not actually considered, such as the unbanked or the underbanked. So I think especially in the pandemic, this has become more and more of a focus, really understanding how best we could create that interoperable layer globally, and in order to disperse, relief funding, for instance. The United Nations has been doing some incredible work with fintechs around the world in order to bring that forward. And I think in terms of other type of emerging trends as well that we're going to see a little bit more of is definitely, I think, that next wave of fintech whether it's 2.0 or 3.0, whichever chapter we're on now. But that's really going to start to take into consideration, what do we need to do in order to really transform the next wave of banking and financial services. I do think that there's going to be quite a lot of intersection outside of the financial services ecosystems, and that we're going to start to blend far more with other type of industries. And you're seeing that as well already happening kind of from the tech sector with financial services, but how is that going to be pushed further? So those type of propositions are going to become far more favorable. But I would say there's a really quite a strong focus. I think if you start looking at where some of the investments are flowing to from large tech, financial services, VCs, sub-Saharan Africa has become a very stark focus for many entrepreneurs and many investors. So I would say in the next kind of 24 months or so, you're going to see quite a stark focus on that and quite a lot of funding flowing that way.
I have so many more questions I would like to have asked you, but we're running out of time. Thank you so much for participating. I'm super happy that I was able to moderate instead of Misha, who couldn't show up. And any kind of questions from the audience can also be answered afterwards in the swap card. Thank you so much, and hope to see you soon. And don't miss out on signing up for the Lunar event in the other track. Thank you, guys.
Thanks so much. Have a great day.
Bye. Thank you.
Thanks, Sarah.
Bye-bye.
Bye.